Hello, everybody. This is Patrick MontesDeOca with the Equity Management Academy weekly podcast for July 26, 2021. Gold. Reinflation for the nation, or Stagflation? Summary. Amazon has announced it will begin to accept payment in cryptocurrencies, which is big news. We have plenty of talk about inflation. It should support the commodity reinflation trade that the VCPMI has activated. We have fast markets across the board today, primarily in the digital assets such as Bitcoin, Coinbase, and Grayscale Bitcoin Trust, GBTC. We are looking at a reversal across the board. Amazon has announced it will begin to accept payment on cryptocurrencies, which is big news. Gold has been fluctuating from the variable changing price momentum indicator, VCPMI, average price all the way up to 1812. It completed a bullish pattern and then reverted back to about 1803. The volatility appears to be in silver, which is showing a stronger bias. It is also trading around the VCPMI daily average price. Copper is at 4 cents, which is a big move for copper. We are trading above the VCPMI sell-to level, which means the market is looking for higher fractal prices. Coinbase is almost 9% up, almost 20 points. It continues to break out through the upside above the VCPMI sell-to level. GBTC is up 16 or 17%. We recommended buying Coinbase last week. The US dollar is down this morning. It should support the commodity reinflation trade that the VCPMI has activated. Copper is up 4%. Other commodities are also on the way up. Platinum and palladium are moving up. In coffee, Brazil is going through one of the worst droughts in history. There has been a drought in central and southern Brazil in almost a century, according to Brazilian government prices. The elements that are coming together seem reminiscent of the 1970s. In 1974, Brazil had a major frost and experienced a major reversal in coffee, when 70% of the coffee was lost to the frost. Gold and silver we go in their own time. We have plenty of talk about inflation. Since March 2020, when the pandemic began, metal prices collapsed, as did almost all assets. There has been a massive correction which brought gold down from 1704 to 1450 between March 9 and 16. Gold then converted from a commodity into a currency. The dollar then became a commodity. The gold market rallied from 1450 back up to 2089 by August the 3rd. The gold market discounted the inflationary environment which we are in. Gold always moves ahead of what could happen. During the run-up, it discounted the tremendous stimulus that the Fed was pouring into the economy. Gold then went into another correction from August 3rd to March 8, 2021, with a low of 1673. The market was taking into account the damage the pandemic had done to the economy. It was a perfect 68.1% Fibonacci correction, a golden ratio. Then gold turned again and started the run-up. The correction was completed. Inflation is running higher than expected. Many assets are now in short supply due to the logistical problems in transport, but also labor shortages and some severe weather problems. Demand is now way above supply, so prices are rising. The CPI and the PPI are now rising fast. After gold completed the bottom at about 1673, that level coincided with a VCPMI 9-year average of 1671. Gold has now established an upturn channel with a low of 1673. and the high of 1619 on May 31st. We are not trading within that channel, making a recent high of 1806, 1810 level. The 1810 is the 360-day average. So we are getting a lot of harmonic alignments which indicate that we are in a trading range. But if we break above 1806, 1810, we are going to see an acceleration to the upside. The VCPMI levels are at 1786 and 1769. Gold appears to have discounted the damage the pandemic has done to the economy. We are at a critical point in gold in this trading range. The question isn't whether gold is going to go, it's just a question of when. Thank you for listening. If you want to learn more about what we do, please go to the Equity Management Academy, EMA2trade.com, or listen to any of our previous episodes.
Are you looking for an automated artificial intelligence trading system? Do you want to analyze commodities and financial markets to determine when to buy and sell? Looking for an indicator to predict future trends in the commodities and financial markets? Welcome to EMA2 Trade Live Signals. Our Variable Changing Price Momentum Indicator, VCPMI, is an automated AI trading system developed and tested over a decade. The VCPMI algorithm is based on age-old vortex mathematics combined with Fibonacci wave theory, trend analysis, pivot points, and several other widely accepted financial analytical methods. The VCPMI can help you take emotions out of your trading and rely on simple mathematics to predict future trends in financial markets. This approach will make your trading more effective, consistent, and profitable. VCPMI algorithm. The VCPMI code points and levels are support and resistance levels and behave exactly like any historical supply and demand level. Therefore, the VCPMI code levels are useful as an index tool for both day trading and for selecting and exercising entries and exits for longer-term traders. Why VCPMI? The VCPMI relies on artificial intelligence to analyze markets and predicts future movements, which seek to determine what a security or commodity is worth at a given point in time. The VCPMI uses technical analysis in the form of mean reversion trading, which seeks to capitalize on extreme changes in the pricing of a particular market based on the assumption that it will revert to its previous state. The VCPMI can be applied to both buying and selling, as it allows a trader to profit on unexpected upswings and save when security or commodity is trading at an abnormal level. Visit EMA2trade.com for more details.